Hi everyone, welcome to my channel. I'm Doris and I'm here to share with you about my stock account update and also today's market news. So today in total I earned $2,205. Second, I'm going to talk about how Wall Street investors bank compete with pessimistic expectations for 2023. And third, why did Tesla plummet? Currently, including the aftermarket price, my account's net asset is $101,210.46. Today I didn't make any trade, but SQQQ I earned 1.6%, which is $1,124, and for DRV I lost 3.96% to $1,091. The market decreased slightly. The Dow Jones closed down 10.88 points or 0.03% at $33,136.37. The Nasdaq lost 79.5 points or 0.76% to $10,386.98. The S&P 500 fell 15.36 points or 0.4% to $3,824.14. According to the industry heat map, the two industries that rose today the most are related to internet. First, internet content and information rose 1.40%, and internet retail rose 2.36%. The industries that lost the most are related to transportation. Oil and gas E&P lost 4.86%. The auto industry lost 4.83%. The oil and gas integrated industry lost 3.82%, and consumer electronics lost 3.54%. Healthcare lost 2.07%. Greg Basic, chief executive of AXS Investments, said inflation, which triggered the worst failure of stocks and bonds in decades, was the biggest concern for the investors over the past year. The new year began with fears that an unexpected hard landing, triggered by the Federal Reserve and its anti-inflation measures, could tip the U.S. economy into recession. In 2022, runaway inflation unexpectedly hit and caused the market to crash, in part because Wall Street and investors started 2022 with the belief that price increases would be contained and the Federal Reserve would keep interest rates low, he said. But as the inflation soared, a diametrically opposed reality emerged, and it persisted. Going into 2023, investors will be cautiously considering inflation-sensitive assets, as well as clinical and other equities that perform well in a rising price environment, he added. Chief Global Market Strategist at JP Morgan said, the equity market lows of 2022 are likely to return in 2023. And we see a continued trend of correction in risk assets, as well as increased allocation to bonds. David Costin, chief equity strategist at Goldman Sachs, predicts the S&P 500 will fall to 3,600 in the first half of the year. If the economy enters a recession, we think the S&P 500 will fall to 3,150 in this case. Michael Wilson, chief U.S. equity strategist at Morgan Stanley, believes that the S&P 500 will hit price lows of 3,000 to 3,300 points sometimes in the first quarter of this year to reflect the profit risk faced in 2023. Citi strategists agreed. Expect a weak start to the year with the S&P 500 expected to be 4.8% lower than our target of 4,000 points by the end of 2022. Alan Zentner, chief economist at Morgan Stanley, stressed that from now on, the labor market may become the key indicator, not the CPI. Bank of America also believes that the cooling labor market is the only way for the fight to slow core inflation to 2%. Next, we're going to talk about Tesla. Today, Tesla dropped 12.24% or $15.01 to $108.1. This is a significant drop this year, showing a weak start in the 2023. It reached its low at around $104.64 and began gradual recovery from the drop, but not as significant as the drop itself. On January 23rd, Tesla announced the production and delivery data of electric vehicles in 2022. Full-year deliveries of 1.31 million units, up 40% year-on-year, falling short of Tesla's 50% growth target reiterated in the third quarter of the last year. In addition, Tesla produced 1.37 million electric vehicles in 2022, and the outstrip of production and deliveries also indicates a sign of sluggish demand. But Tesla attributed the reason to logistical bottlenecks in the fourth quarter of next year. Tesla delivered 405,227 electric vehicles and produced 439,701 electric vehicles, which is way more than demanded. This is also the second consecutive quarter of that the company's production has exceeded the delivery, and in the third quarter, Tesla delivers about 22,000 vehicles less than production. Starting in 2022, Tesla began production at 2 new factories in Austin, Texas, and Brandenburg, Germany. Once ramped up production in Fremont, California, and Shanghai. But in the past December and January of this year, Shanghai's Gigafactory has rarely shortened production time. In the past year, Tesla has faced multiple challenges, including a temporary suspension of production due to the pandemic. In the fourth quarter of the last year, Tesla also offers steep price cuts and other promotions in the US, China, and elsewhere to spur demand, although in doing so could weigh on its profit margins. JP Morgan analyst Ryan Brinkman will cut Tesla's price target to $125 from $150 and maintain an underweight rating on the stock. The analyst lowered his expectation after Tesla reported fourth quarter deliveries slightly above his model, arguing that new car deliveries appear to come at the cost of higher incentives, suggesting lower pricing and profit margins. In addition, the analyst told investors in a research note that fourth quarter deliveries fell short of consensus expectations, dragged down by lower pricing, and consensus expectations for fourth quarter earnings of $1.19 per share could be revised downward. He expects the stock's multiples to shrink further as the company's growth expectations fell. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.